Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there, just to let me know that it is working. Hope everybody's having a fantastic morning so far. Hopefully your trading's been going well. We've had a lot of really good trades this week that we'll talk about in just a few moments. I do have a banker's close trade that I want to hop into if it's not too late. So we'll go ahead and do that real quick. But as always, just want to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you're to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, let's go over here. I want to pull up, okay, the trade I wanted is already moving. It's this euro pound. I wanted to do a euro pound short. It's a little late, but I'm gonna still do it. I'm gonna take just a starter position short on the euro pound here. I'm nothing huge. Um, it's a trade I wanted. I'll show you why in just a second, but let me just get into a starter position here. Okay, so yeah, it's a little late to that one, but would have been nice if I got in like 5 minutes ago. So a couple of things with this euro pound here. So if you look at, this is a 1 hour chart, you can kind of see the recent price action. A couple of things going on. So we have this kind of accumulation area, and the market was kind of trying to decide what it wanted to do or what it wants to do. Recently, we formed a head and shoulders right here, right? And a couple of things also took place. So you got this head and shoulders pattern, and if you want to break down the market even more, you can identify that there was a little bit, in fact, it's more visible on a 15-minute chart, so let's do that. There was a structure point right here, right? So this is support. This area is acting as support right here, and then it broke to the downside. Okay, and what you're looking for is the liquidity that created that break of structure. So this is the area, this is the liquidity that created it. And about 5, 10, maybe 15 minutes ago, this market tapped into that liquidity zone right here. So it just tapped into it and immediately pulled back. So that's what would have been the ideal setup, is if we had gotten in at the liquidity that created the break of structure. So nonetheless, it's still a really great trade because overall, this market is looking to break even more structure from what I can tell. So this is obviously a structure point right here. Lots of engagements throughout this region. I do believe the market wants to break this. I don't know if it's going to break it, this morning. But nonetheless, it is the trade I do want to take. It's the position that I want. So as far as a banker's close trade goes, I think this is the best one. Ideally, we could have gotten into this maybe 10 or 15 minutes ago. That would have been the ideal setup right there. Okay. So anyway, one other thing I wanted to say is I just wanted to say I appreciate you guys because I was gone this week, and so I struggled with Wi-Fi for a couple of days. Yesterday, I did host a Banker's Close trading webinar. That recording is posted, so you can go and check that out if you want to, from yesterday. But yeah, so appreciate you guys for being patient with me. But I'm back to my normal setup here today and ready to rock and roll. So. But yeah, this is a good trade. As far as the stop loss goes, for me, there's no reason to have your stop losses further out than the liquidity zone, right? So if this is the liquidity that we're banking on, if it's right here, there's no reason to have a stop loss outside of that, right? So I'm going to go ahead and pull these in. In fact, you could even maybe put them above this pivot high right here, would be fine. So, but I think at the most, this is probably what you'd be looking at. A lot of people will frown upon putting a stop loss just above resistance like that. The thing is, that's a liquidity zone, so that's a little bit different, right? So for me, I'm okay with that because we've already done our analysis. We know what the setup opportunity is just this thing right here. So it's this liquidity, this break of structure. This is the thing that we're working with. So if the market inevitably, not inevitably, but if it were to break out above this area, it just, the trade setup wouldn't make sense anymore, right? So that's what I'm trying to indicate here, is this is the setup. So if the setup doesn't work, if the liquidity zone is not working, then it's time to exit the trade, right? That's what I'm trying to say. Okay. As far as the take profit goes, obviously it would have been way nicer to get in 10 minutes ago. So I probably would have taken some profits already. But that's basically where I'm getting in at this point. But as far as where most of these profits should go, I would say, honestly, I'd have to wait for a little bit of a break, or maybe I would take some of these, if the market got down to this old pivot, I might take some there. But ideally, the market breaks out of its structure here and just continues lower. I mean, that's what the price action is telling us right here. Price action's telling us that it wants to break down even further. So that's what we have to go with, right? So I will take some of these off the table if it comes down about 10 to 15, maybe 10 to 15 pips or so. And then the rest of these I'll put down here. Some of these I might even float over the weekend. We'll see, but it's a good enough trade to do that. So 10 to 15 pips would be like right here and right here. Okay. So I'll scatter some of these out. Okay, cool. All right, so scatter those out, let those do their thing. I can pull this over here now. So now that I've got that kind of set up, I can pull this over here. Okay, so let's talk about some of our open signals and trades that we have. Let me pull this up over here. I've got, let's do this. Let me go ahead and pull this over. Okay, so we have right now, let's see, we have the Euro Yen short. This is the trade right here. I'm down $125 on the signal that I posted. I did take a trade early that I'm down $800 or $900 on. And then our USD franc trade's doing great, right? We're up 2 grand on this one. Yesterday in the webinar, we inserted a hedge. So if you pull up the USD franc, let's talk about this one real quick. So we sold right here as a signals program. This trade was, in fact, let me pull this up. As a signals program, we sold, what day was this? March 29th. So on Wednesday morning, I posted this trade right here, this dollar franc short. This one was a market order just because I saw an opportunity right away to just go in short on the USD franc. So I do try to send you guys more, limit orders, because obviously if you get in on a limit order, you're going to get in at the same price that I'm getting in at, right? It's going to be within a tick or two, maybe exactly to the tick of the same trade, right? It just kind of depends on the broker that you're on and a few other factors, but it should be the exact same trade, right? Market orders are not, the only downside to a market order is that, if you're not present at the computer, if you're not in the webinar or you don't have it, it's going to be harder to take. I will take these, but I do try to, as you guys know, I do try to take more limit orders if I can, just so that we're in together. But sometimes the market just has an opportunity right away. If you guys remember last week, we took that USD CAD trade in this webinar a week ago on Friday, and that trade ended up on my account. I made over 10 grand on that single trade. And we recapped that trade a little bit yesterday. We can talk more about it as well today. But that trade is now done. Like we've we did it. We just robbed the market on that trade. And we've got some other trades doing really well too, but that trade was really awesome, but it was a market order as well. So sometimes you just get the opportunity as it comes, right? And we'll see if we can find some more opportunities like that today. But this one was taken in the webinar. So, you know, if you were actually, no, I did not host a webinar on, never mind. On Wednesday, I did not host a webinar because I had bad Wi-Fi at the hotel. So this trade I just posted as a signal at market during the normal webinar time. But anyway, let's talk about this one. We did talk about this one yesterday because we inserted a hedge in the webinar. So if you haven't placed a hedge in yet, I would do that. So what the hedge is for those of you that are new, which by the way, I do see a couple of new faces. It's good to see you, Danny. Welcome to the program. Excited to have you here and work with you. And anybody else watching the recording, just want to say hello and welcome you guys here as well. And of course, all of you old timers, welcome back, right? You guys are always welcome here. So let's talk about this hedge, right? Like, why did we take this hedge here? So first of all, it goes back to why we took this trade in the first place. So we sold right up here. We sold at a very, very good price on Wednesday morning, okay? And the trade immediately started to go in our favor. Okay, so this went in our favor pretty quickly. I think, yeah, it was yesterday morning. So about 24 hours later, the market gets into here, kind of a demand zone, and we place a hedge. Why do we do this? So basically the concept is when you're taking this type of a trade and you're profitable and you're like a little bit nervous that this market may end up going against you, you want to lock in profit, right? So what we do is it's difficult to close half of your position. Like it's in fact, for me, it's impossible. I took 3.02 contracts short. So half of my position would be about a 1.5 contract, right? So it'd be it's really hard for me to close half of my position. So you can technically close half of your position by just opening up another trade in the opposite direction as in the form of a hedge, right? If you're trading on a Wanda or Forex.com with Gain Capital, they have this new feature where you can reduce your position. Okay. So not everybody offers that. And I think US brokers offered it because we're not allowed to hedge in the United States. The only way you can hedge is like this is on a different platform. This is a prop trading firm. So I can hedge with these guys because they're not in the United States. They're not a broker, right? But if you are trading with a broker in the United States, you'll just have to reduce your position. So that's what you'll do instead is if you took this trade on like a Wanda or Forex.com, maybe TD Ameritrade with Thinkorswim, you're going to want to reduce your position. So anyway, so back to this. I ended up entering a hedge because I wanted to lock in what we already have. So it's in the form of it's half the size of the original trade. Before you enter the hedge, what you're going to do is you're going to bring your stop loss to break even. I actually brought mine just a little bit into profit, as you can see here. So my stop loss on this trade is already in profit. And my take profit on this, or excuse me, and my take profit on this trade is at its original take profit, which is down here. So I still believe that this market is set to come all the way down to here. That's the only reason why you put in a hedge. If you think the market's going to go against you, just plain and simply going to go against you, just close the whole trade. Just take all your profits, right? But because I think this market still has more juice in it, I think it's still going to keep going down, right? Ultimately. So I don't want to close my whole trade. I just want to make sure I lock in some of this just in case, right? That's the example or instance in which you would use a hedge, okay? So I do think the market's still going to go in my favor, so that's why I think I should use a hedge. So I locked in half my position. So after I bring my stop loss to break even, then you're going to enter a hedge in the opposite direction. So a trade in the opposite direction in however much you want to lock in. So I locked in half, which is pretty much what I do every time I get in a trade that's pretty profitable. I'll just lock in half. And then what I'll do is I'll put the take profit of that trade at the stop loss of the original signal. So my buy has a take profit at the stop loss of the sell. Okay. And then down here, I have a stop loss on my buy at the take profit of my sell. Okay. Ultimately, what happens is we want the market to continue lower. We're going to lose like 90 pips on this buy position. Okay. But we're going to make an additional 90 on the sell, and it's twice the value, right? So that actually happened to me on my other trade last night. I had this trade close out. Do you guys remember I showed you this trade? This was a personal trade that I took. It was on the Kiwi dollar. Okay. So I ended up, I took a long position several days ago on the Kiwi dollar. The trade hit its take profit right here. And I entered a hedge a few days later after it initiated, after I took the trade. That hedge has stopped out, and it stopped out at the same time, or nearly the same time. You can see right here, it closed at March 31st at 4:31. This one at 6 seconds and this one at 35 seconds. So I'm not sure exactly why they took a few seconds later, but it was all within the same minute. Everything closed within the same minute. So you can see this loser, its corresponding hedge did lose money, but the original trade made more, and it did exactly what we wanted it to do. It just continued to its target, right? The original trade continued to its target right here and made the most money. So ideally, I guess maybe I would have never entered a hedge, but there was a point in this trade where I thought, oh, I don't know if it's going to actually go to its target. I don't have as much confidence. There was some supply blocks showing up. It made me think, oh, I think this may actually go down potentially and stop me out. So I want to make sure that I lock some of this in. And so that's what the hedge was for. Okay, so that's what happens when you lock in a trade like that. So with our USD franc trade, this one right here, it is now impossible for us to lose money on this. Okay, we have already sold. Our stop loss is at break even, and we've got a hedge in. No matter what, we are going to make money on this trade, right? Okay. And then we have some other trades going on. This is a personal trade. I got a hedge on this one too. Let me actually show you this one just so you can see the concept again. This one, I took a buy right here. There's my buy position. And it started working out right away. And I put in a hedge right there. And it actually got flirted with my take profit up here. Came back down, came back up, and it's down again. So this is an example where a hedge is really, really nice because I sold half my position right there. I've locked in half of this. And so you'll see right here, my buy position is still up $2,100, $2,200, and my hedge is now up $600, almost $600, right? So I have locked in half of this position. And again, this one could go down all the way to here, stop me out of my original trade, but at least I made half of that. Or it does what I hope it will do, and it'll just go up from here another 70 pips, 75 pips, hit my take profit on my buy, and stop me out on the hedge. That's what I hope happens. So that's kind of it in a nutshell. Okay, now let's talk about our open trades. So I have another open trade. I guess we have two open trades. We have that USD franc, and we have this trade. So this is a position that has been kind of annoying for the last couple of days, right? For us, we sold right here, and I'm down on the signal that I took with you guys. It's this one right here. I'm down $150, so not bad. My worst trade though, I did take this trade a little bit earlier. And I sold right here. That was not a good time to sell, unfortunately, but I'll show you why I did it nonetheless. Sold right here. It actually got pretty close to my stops up there. And now it's pulled back. Now let's talk about why we're in this, and let's pull up the charts as to why we're in this trade. So a couple of things. Let's go to an hourly, pull this up. So There's several things going on here. And actually, before we use the order block indicator, let's break this down. So here's the euro yen on an hourly chart. As you guys know, most of the trades I take are on an hourly time frame. Some of them are maybe on a higher time frame. But most of my trades are going to be on an hourly. Sometimes I'll drop down to a 15-minute. I just think the hourly is the king time frame. I really do. I think it's the best time frame as far as taking day trades goes. I think the hourly is your friend. 15 minutes, another really great one if you really want to localize exactly your entries and things like that. 15 minutes, another really good one. I think daily is very important as far as like macroeconomic variables go and looking at the overall picture of the market. I think your daily 1 hour, the daily and the 1 hour are really important. You can use like 4 hours, you can use a 2 hour, you can use, there's 3 hours. You can use all of those too, and they're really, really helpful. But yeah, anyway, I'm just letting you know. I don't know why I brought that up. Just thought I'd share that with you. Okay, so looking at this trade here, couple of things going on. We have definitely a supply area up here. Couple of reasons why there's supply. You had, I guess, originally, this was a structure point that broke on this news event back in December. Okay, so you have a break of structure that took place here. So step one would be to find the structure, right? That's one structure opportunity. You could even say that this is structure like right here. Both of those would be fine. Yeah. And then the thing that caused the break of structure is this, right? Whatever accumulation, let me zoom into this. Whatever accumulation took place in here, and obviously the news event, whatever news event this was back in December, ultimately caused this break. So if the market were to ever return to this area, then you know that you've got an accumulation zone. I would also go as far to say that this whole area right here is the liquidity that created the break of structure. But I would definitely say at least that area right there. So now if you come forward on this chart, if the market ever returns to that area, you're going to find supply, right? Because that's what created a break of structure. So sure enough, like anytime the market comes into that area, it pulls back. And we're seeing that again a second time. So this is one. So if you go through the manual process, this is why we're taking that trade, right? My 1, 2, 3 step model: find the structure, 2, find the break of the structure, and then 3, find the liquidity that subsequently created said structure, right? And that's what this is all about. And so we've got that good area. It is really my bad that I did not get us in at a better price. That is my responsibility. That, and I'm taking it in the shorts a little bit on this trade. I guess the trade that you and I took together, we're down hardly anything at this point. It's almost back to break even. My original trade is not doing great though. But by the way, I mentioned this yesterday, but I want to show you guys. Look at my lot size structure that I've built here. Notice how the trade I took in the signals is a little bit bigger than my original trade. So this one has, the one I took with you guys has 1.65 contracts. The one I took early has 0.99 contracts. So here's how it's kind of a genius way to do this. You guys are gonna love this. Okay, at least I think some of you could see how you could use this. So when I find an opportunity, which this is an opportunity right here, sometimes I don't, you guys know that feeling, right? The FOMO feeling, you don't want to miss out on a great opportunity. So one of the things that I do is maybe I'm early to a trade, but I don't want to ever miss out on a trade. You guys remember that? We took a lot of trades maybe like 3 weeks ago, 4 weeks ago, and the market would never like dip into our liquidity. It would just like go without us. I can think of the Euro CAD trade was a big example of that. We had a huge opportunity to buy the Euro CAD like 3 weeks ago. Yeah, we had some opportunities. Like if I remember, I think we used like this liquidity zone right here. And there was a few others. Maybe we even said that this was a liquidity zone, which is now tapped into. But it took a long time. Let me delete this one. So these were all liquidity zones, but we could never get the market to tap into these. So one of the things that I've been doing is just taking the trade as is. I just take the opportunity. But the thing is, I don't want to over leverage myself, right? So you have to find that balance. So one of the things that I've been doing is I come over here and look at the euro yen and I say, hey, okay, I know I want to sell this, right? And I'm willing to allocate 1% per trade, but maybe I'm willing to allocate up to 2 or 3% on the opportunity, right? So if I'm willing to allocate 2 or 3%, um, I can take another trade if the price gets better, right? So if you look at the trade setup that I have here, let's pull it up. So I originally sold here, not a great place. A little bit better of a place right here, the signal that I sent with you guys. And then I honestly probably should have taken another one right here. What I do is I say, okay, between here and here, that stop loss is 1%. So I've already done the lot size calculator. I used the lot size calculator to figure out, okay, a 0.99 contract, if it gets all the way to the stop loss, then I am going to lose on this trade 1%. Okay. At this better location to sell, which is the one we took together, this is the contract size that I need to allocate 1% to this. Okay. So if these two trades were to hit their stop losses like right now, I would lose 2%, exactly 2% of my account if I hit that. And it's what I'm willing to allocate to this position is 2% of my account on this trade opportunity. Okay. The other thing that happens when you do something like this is, and you always have to do it you always have to do it very planned, if that makes sense. You can't just go into it you can't go into it willy-nilly. You have to have a plan. The other cool thing is if you play it this way, a lot of the times when the market starts to pull back in your favor, you can close out the lower trade. Like this trade I can get rid of. I'll probably do that if I can get the market to drop just a little bit more. It looks like we're on the cusps of being profitable now. So if this thing can drop a little bit more, I might close out this one for a small L and keep the other sell going, right? So that's another way to manage the trade that if you want to do it that way. I used to take these types of trades before without using a lot size calculator. I would just go into the opportunity and just sell, 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 sell. And just, I really wouldn't really know how much leverage I had on a trade. This way I know exactly how much I'm risking, which is really, really nice. So if you're not using a lot size calculator, which I have it right here, I have it bookmarked, guys, position size calculator right here. You click on that. You have to use this, guys. I really seriously, you have to use this. I mean, if you're not using a lot size calculator, I don't know how you're going to pass prop firm challenges long term or stay funded with a prop firm. You have to use a lot size calculator. There's this one, and then who else was it? Was it Carlos or who was it that showed us that? Maybe it was Kevin the other day. He showed us the lot size calculator on TradingView. You can actually search in the indicators up here, just search, or is it risk calculator or something like that? Yeah, it might be risk calculator. Anyway, if you want to use one on TradingView, there's tons of them here. Okay. And then I just use this one on my FX book. Okay. 1 second, guys. I got some clients that are trying to get in the webinar. Oh. Okay, 1 second. Give me 1 second here, guys. Go ahead and explore that link while I just got to send this message real quick. I do apologize. Okay, perfect. I think that will take care of that. Okay, cool. All right, guys. So yeah, like I said, I think it's imperative that you use one of these. So if you think about it with prop firms, the way prop firms work is, they give you a lot of these risk metrics, right? That um, you have to stay within the lines, right? Consistently. Um, most prop firms have the standard of you can't lose more than 5% a day, right? So if you think about it, if you're using a lot size calculator and you pull up 5 different trades at 5%, at 1% a piece and up to 5%, you should be fine. Or if you make it just a little bit less than that, if every trade hit their stop loss, you could live another day, right? And so that's the whole point behind using this. I used to trade, I don't know about you guys, but for a long time, I just would take a fixed lot size on every single trade. So I would just say, okay, I'm trading the euro yen today, or I'm trading the USD franc, and I normally trade 5 lots. Boom, slap 5 lots on. Guys, I don't know if that's a really good way to do this, right? I think it's really important to manage each trade and know that, hey, every single trade is 1% of my account, or every single trade is 0.5% of my account, or 1.5% if you're a little bit more aggressive. For me, my lane, my risk management structure has been really, really good if I just do 1% per trade. Plus, as you guys know, most of these trades do make 2, 3, 4 times what we're risking. So if I do lose, it's fine. The very next trade should make it up. Or if that one loses, then the next trade will make up all of those, right? If you guys remember this trade right here, of course you remember it was our best trade, probably not this year. I had a really good trade. If you guys remember, it was back in February. I did have a trade that made 14K on one trade. This one made just over $10,000, our USD CAD trade. But I only risked, how much did I risk? Do you guys remember? 1%. Always 1%. So 1% on the trade. So I was risking $2,000 of my account. Um, and I made 10 grand on that setup. I used to think that those types of trades were impossible. Like it's really hard. I mean, it is still hard. You have to look for them, and you have to be patient and let them sit, take some discipline. But I used to think that was impossible. Like, how can you only risk $2,000 and make 10 grand? I thought that was crazy. No, it's totally possible. You guys can do it. And also, I mentioned this yesterday, but look at my order history on this account, right? Look at the losers. I'm telling you, I'm being consistent here. When I say I'm being consistent, I am being consistent. In fact, sometimes I close these trades early if they lose, right? Like this one lost $1,179. Try to find a loser that's over $2,000 on here. You can't find it, right? Like I've got a loser right here that lost 1,500, 1,600. Another loser that lost 1,200. A loser right here. This is my worst loser. I lost just under $2,000. So it hit its stop loss, but just before I hit 1%, right? That was clearly intentional, right? Definitely some winners in here. Some of these winners I closed early just because it wasn't the setup I was looking for. Sometimes when you take a trade, the setup kind of disappears. It doesn't look as good anymore. So sometimes I'll close trades early if I don't see the setup that I want, right? So, but it looks like our trades are doing really well now. In fact, our trade, just as I was talking here, our signal on the euro yen is now profitable. At least the signal side of it is now profitable. And so yeah, now all of the trades we've taken together are now in the profit, which is really exciting to see. So we'll just continue to let that sit there. Also, just I do want to give a shout out to Roger. Roger passed another FTMO challenge this week, so just a little shout out to him. Doing really, really well with that. So I do want to just give you a shout out there, bud. So um, I'm really excited for you. Seriously, keep that up. And if you guys pass challenges using these signals or using your own systems, let me know. I love hearing about your success stories and how things are going. Really, really exciting. So keep it up. Definitely keep it up. All right, guys. So let's go ahead and let's actually spend some time here trying to find some more trades. some more trade opportunities. Oh, one last thing I wanted to say. So obviously this was an ideal with the euro yen. This is an ideal liquidity zone right here. And specifically in the very purple area, the more purple area, that's the best liquidity zone to have sold at. And again, that's my bad for not getting us in right there, because that would have been perfect, right? And this is just going through the 1, 2, 3 step model, right? First step is to identify structure, okay? And you can definitely see that this is a structure point throughout this market. Find where it broke, and then find who caused it. That's step 3. Who's the culprit? Who created this break of structure right here? Oh, this is what created it, this area. Perfect. If the market ever returns to this area, you're going to get a pullback typically. Okay. Now, on top of this, you can use other tools that are very, very powerful, right? The one we've been using most recently is this LuxAlgo order block detector, right? So on LuxAlgo, you can see here all of the selling pressure that's in here. It is insane how much selling pressure is in here. Tons of selling order blocks. There is a buy block here that we'll keep our eye on. But if you switch multiple time frames, you can see these order blocks. So right here, tons of order blocks. You go to a 3-hour. Oh, the 3-hour was perfect. Look at this. 3-hour was saying that this area was the order block. That would have been perfect right there on the 3-hour. You go to a 4-hour, and they're saying this whole thing is supply, right? Okay, one little thing or comment I want to make on these order blocks. If you're going to use LuxAlgo or Sonar Lab or anybody else's order block indicator, I have found that the best use of an order block indicator is to use it on multiple time frames. So don't just trust a single time frame. Don't go on the hourly chart or the 15-minute or 4-hour, whichever one you like to use. Don't go out there and just say, oh, I see an order block. I guess I better buy here, or guess I better sell here. What I want you to do is, here's actually how I do it. So whenever I'm looking for signals on top of my 3-step model, what I'm doing is I come over here and I say, okay, I see a lot of selling pressure, and I see that these order blocks looks like it's ends right here, or actually it ends just about right there, and the order block sell signal starts right here. And then what I'll do is I'll go to a 2-hour time frame, and then I'll try to make sure that these order blocks overlap. So I'll say, okay, yep, this is looks like all of these overlap. It looks like they're saying more specifically that this is the order block right here. So I'll scoot it in just to where it overlaps. And then I'll go to a 3-hour chart. And then 3 hours saying actually specifically this is where the only overlaps. So I've got 3 different time frames saying there's overlaps right there. And then I'll go to a 4-hour, and the overlap on 4 different time frames is still it's right here. So obviously had I done that exactly how I just said it, that we would have sold at a most pristine price right there. But what you're trying to do, the concept is you're trying to get as many time frames to have overlapping order blocks. Does that make sense? I hope it does, because that is the key, is finding multiple times, because sometimes you can get lured into a trade that doesn't have a multiple time frame order block. Maybe the 15-minute says there's an order block here, and you're just about to get sucked into a trap, right? But if you can find that multiple time frames using these types of indicators are telling you that yep, there definitely is an order block here, and it's on 2, 3, 4, maybe even 5 consecutive time frames, there's a really good chance you're going to get a fantastic trade out of that. And the other thing that you're going to find is you're going to localize almost exactly where the market's about to turn, because you're not just selling at any price. Like if I were to this is what I did, and I'm telling you not to do this, right? And it's so far working out, but what I did is what I don't want you to do. I don't want you to just go out to the 4-hour time frame like I did and just execute a sell as soon as it hits this order block right here. So, I sold here or here. I can't remember exactly where, but I didn't sell at a really great price originally. And then I sold a little higher with you guys, and that one's doing better, right? But ideally what you do is you come out to multiple time frames, you find, okay, where am I getting most of these overlaps? Okay, it looks like these overlaps are really just occurring right here. That's where we should look for sells instead. Okay. Anyway, and that's in addition to the manual model of finding your own order blocks, right? So you can use these indicators, which I think they're amazing. I don't think there's any reason not to use them. If it can provide you with an edge, you might as well use them. I've often referred to them as training wheels. I don't know if they're training wheels because I still use them, right? And I know how to find structure. I know how to find liquidity. I just think it's great in addition. But as you guys know, I don't want to trade a liquidity zone unless that liquidity zone is associated with a break of structure. Okay. So when you pull up an indicator like this, they're saying there's order blocks here, 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 and up here. There's a lot of different places where there's order blocks, but the ones you and I want to trade are the ones that are associated with those breaks of structure. Okay. And this can just help you find that a little bit more. Okay, so here's what I want to do, guys. Actually, last thing I want to recap, just taking a look at our USD CAD trade. This was amazing. Here's the trade again in recap. This is the trade we took Friday. We sold right there on Friday in the webinar. It was a 5.7 to 1. Okay, that's pretty amazing. That's almost 6 to 1. 6 to 1 on a single trade opportunity. So I think this is the second best trade I've taken all year. Just this one we took on Friday. It took 5 days to play out. And as a reminder, I am still looking for sells on the USD CAD. It's not over. Like, we're definitely still looking for opportunities to sell this USD CAD. But you're going to have to look for places of breaks of structure, right? So let me give you an example. Like, if I were you, here's how I would look for another opportunity, because we're definitely looking for sells at this point on the USD CAD. It is no longer an uptrend. It is definitely in a downtrend at this point. Make no mistake, right? So what I would do at this point is I'd say, okay, great, draw out your structure points. Okay, so I see that this is definitely a structure zone right here. Who created this break of structure? That's on a 4-hour chart. If you want to go to a 1 hour, you could probably break this down just a little bit more and find out who created it. So first of all, where did it break? It appears that the market broke. I guess you could argue that it broke here, but I think the real break was right here, right? So those are the breaks of structure. So who created the breaks of structure? Well, this guy did. Whatever accumulation, whatever final orders took place, really in this whole area, that's all liquidity. This whole thing is liquidity, right? So if the market could ever get back up to there, that would be a huge sell zone. And I bet you, yeah, sure enough, there's an order block right there. So that would be a great place to do it. So my manual method is indicating that that is a sell order. That's a place to sell. And sure enough, they're saying that it's more like this. That's the place to sell right there. And then I would just go on multiple time frames, go to a 2-hour. Okay, they're saying that there's a little something right there maybe. How about a 3-hour? That's expanded just a little bit right there. Let's try a 4-hour. And yeah, they're saying it's more like that is the liquidity right there, right? So that's how you can do it. I like doing it the manual way, where you manually go find this. And then if you want to use the indicator, I would recommend it. I think it's a very helpful thing to do in addition, right? Okay, so are there other places you could sell? That would be the very best and most obvious place to sell. But the problem is the market's got to go so far up to get there. Could you place a pending order there? Sure. Go ahead and place a pending order there and just let it sit. It may never trigger, but it's worth having, right? And that's the type of trade, guys, where you could put in definitely, sell there type of thing, stop loss here above the liquidity. and just go for the moon. Like that's the type of thing that you can get out of these, right? Um, all right, so you could look for some other structure points, right? So, I mean, it's harder to find because this thing just keeps breaking down, but you could argue that this was structure right here, right? So, yeah, that's definitely structure because it used to be resistance right here, and it has become support recently, right? That's definitely a structure point. And this market, so that's step one, is to find it. Step two is what? Step two, you got to find where it broke. Looks like right here. So who created it? Who's the one that caused it? And I'm sad that I'm using this already because we can find this on our own. It's basically this area. Um, whatever accumulation took place, I would argue that this whole thing right here is the structure, maybe just specifically that structure right there, or that's the liquidity. So that's the third step. And then, yeah, if you use Lux Algo, they're going to tell you the same thing, that that's liquidity. Sure enough, right? So it might actually be worth posting a signal on this one. I might do this to put a signal to sell right there. That's on a 1 hour chart. So if you go to multiple time frames, let's see what those multiple time frames are saying. Okay, so they're saying, so the 2 hours saying that you need to include this. The 3 hours says that same thing. 4 hour likes, looks like they want that a little bit more instead. How about a daily? Does a daily have anything? No, daily's not going to have anything on here, except where we originally sold up here. That's where there's a daily liquidity zone. The next daily demand is all the way down here. So I'm kind of thinking I'm just looking for sells on the USD CAD all the way down until it gets to here. So one other thing I really want to touch on, because I talked to a trader yesterday about this concept. So I was telling you guys, from a macroeconomic standpoint, I am looking for sells on the dollar right now, right? We talked about this many times this week. Go back and look at the recordings. Talked about how we finally got the Fed to crack. They haven't announced that they're pivoting yet, but we know they're 1 or 2 rate statements away from a pivot. Maybe we have already passed it, right? So since we know this, the market's already pricing in lower rates coming, right? Even though it hasn't happened yet. So anyway, because of that, we're looking for a weaker dollar, okay? So that's what's caused, ever since that FOMC meeting last week, this thing has been on a train wreck to the downside, okay? And it's probably going to continue to happen unless Jerome Powell or Jeremy and Grandma Yellen come out and say, hey, we're actually pivoting, or we're not pivoting, we're going to keep raising rates. If they come out and say that explicitly, you're just going to see this thing go back up. But I don't believe that's going to happen. And nor does the market believe that's going to happen. Okay, so you come over here. So you're just looking for sells all the way until here. Now, this is the point I wanted to bring up because I had a trader talk to me about this. Just because I'm looking for sells on the dollar right now doesn't mean you should just go ahead and sell every dollar pair. Okay. When I say we're looking for sells, I'm looking for places to do it. Okay. I'm not trying to just take the trade just because I'm supposed to take the trade. I need to find a place to do it. Right. So I'm showing you where these places are. Right. So we've kind of identified that this is the area right here. We'll have found 2 areas for you. So honestly, I'm going to include this little area too. So this is my liquidity right here. Okay. This is a fantastic trade. This is actually a phenomenal trade. If you and I can get this market to come up to here, we're going to sell, and I'm going to bet a whole % of my account on that trade. Okay, that's what we're going to do. Okay, and my trade is going to look like this. It's going to be a sell right here at liquidity, the stop loss just above my liquidity zone. Okay, and I'm going to target something like this. I'm going to go for a 5-to-1 or a 4-to-1 reward to risk ratio. That's what we're going to do, right? So anyway, guys, so I'm going to go ahead. I'll probably post this trade. In fact, I definitely am going to post this trade. It looks like a good one. And last little thing I wanted to just indicate again, go through that process when you're looking for these trade opportunities. Go to a 1 hour. Okay, great. There's a liquidity zone right here. Let's see where it overlaps the most. In fact, here's what I'm going to do. I'm going to just draw it out each time. So now we go to a 2 hour. Okay, so they're saying that this is their liquidity right here on the 2 hour. This might actually be the way to do it. Okay. And then on a 3 hour, they're saying, yep, that whole thing is liquidity, the same as the 2 hour. I'm going to draw it out again, just so it highlights even brighter. Okay. And then the 4 hour is saying that that's also liquidity right there. So this is it right here. Now, I probably will start it where that 1 hour starts because it's not so far away. Yeah, I'll probably do that. I'll probably start the sell right here. Stop loss right there. And then here we go. You could do something like that, or honestly, I think I'm going to go like this. That's what you're trying to do. So we know we're looking for sells, but we need to find a place to do it. And this is how you want to do it. Okay. So I will go ahead and post this trade. I will look for some other trade opportunities for us to take as well. But that this is how you want to take your trades going forward, guys. Yeah, this looks good. And then, yeah, there's really no other updates I need to make. We're already hedged on that USD franc trade. We're already hedged on this one, so we're looking really good. And then we have this euro yen position that's just in and out of profit right here. So, you know, we're basically at break even. I'm down $30 on our signal. So we'll just let that sit and do its thing. It's a great little trade. We're just going to let it do its thing. All right, guys. So other than that, I'm just going to look for some more trade opportunities that I can post. I'll get more signals out to you guys and continue to look for more. Another thing I want to remind you guys of is if you find a trade that you really like and you're thinking, hey, I think this fits everything that Steve's talked about. It's got the order blocks, the multiple time frames. I went through my manual 3-step model, find the structure, find the break, find the liquidity. You know, I went through that process. If you want to send me a text message on Telegram or a regular text message, send me an email just saying, hey, Steve, I found an opportunity. What do you think? I will give you my feedback on that trade. So, you know, let me know what you guys find and I can let you know what I think. But yeah, other than that, guys, I think that's about it for the week. But it was a great week, wasn't it? It was a good week, and I'm excited to have another good week, and we'll get some more trades loaded up going into next week. So really appreciate you guys. Thanks for coming. Have a fantastic weekend, and we'll see you guys on Monday.